Just because your mortgage lender has approved you for a certain price point does not mean that that is the best price point for you and your family. So today, I just want to let you know that a mortgage lender does not have a responsibility to your family's budget. What they're going to do is tell you what the maximum you can actually qualify for. And just because you qualify for a mortgage loan does not mean that that's actually what you should buy. A lot of my first-time homebuyer clients right now are getting me a little bit worried because they're really pushing their monthly budget, and I'm just wondering, are they really going to be able to comfortably afford this new house payment along with everything else that goes into owning a home? So that's what I kind of want to break down today. How do we come up with these numbers, and what should you do about it with your situation? Okay, first, let's just talk about what a mortgage lender does to pre-qualify you. Obviously, we look at your credit, income, and your assets. I have done plenty of videos on that, so if you're interested in that, check out my YouTube channel. But for the amount of house that you're going to be qualified for, it will not be more than 45% of your gross salary. Okay, so just for comparison, let's look at somebody who makes $60,000 a year. 60,000 divided by 12 is $5,000 a month. You take $5,000 a month, you times that by 0.45, and that's going to give you your house payment. In our case, it's $2,350. All right, $2,350 has to be your house payment, your homeowner's insurance, your mortgage insurance if you're not putting 20% down, as well as your taxes and HOA fee. All of that has to equal that 45% of your gross salary. Now, what could be on top of all of that house payment in your monthly budget, though, are all of the debts. You might have student loans, you might have credit cards, you might have, other sorts of loans that you have to pay back, but you also have to eat. You want to go out to dinner every once in a while, I'm sure. You might have kids who have sports, and we know how expensive all of that stuff is. There's so much that goes into your monthly budget. So you need to know how much you are actually spending every month in order to be able to comfortably pay for a new house payment. So I understand the temptation to max out your budget when you're buying a home. Let's face it, house prices are very expensive, mortgage rates are still high, and people's salaries just have not been keeping up with that. So in order to get a home, you might be tempted to maximize your budget, but only do that if you've got a lot of cushion. So I'm going to give you a couple of ways that you can test before you buy if that cushion is actually enough or if you need to modify your budget. So in our prior example, we talked about a $2,350 monthly mortgage payment. That is your max. If your rent that you're currently paying is less than that, then you need to save the difference. If your rent is $1,500 a month, then you need to save $850 a month. And I would do that for as long as you can, maybe 3 months, 4 months, and see how comfortable that is. I would also anticipate another few $100s every single month for unexpected repairs. These things do come up in homeownership, and a lot of people don't even think about them. Let me give you a prime example. When we moved into our house, we had a squirrel problem. They were getting into our attic, and putting nests in our attic was totally disgusting. We ended up having to pay pest control to come out and seal up our entire house, and it cost $2,000. That is a lot of money to keep rats out or squirrels out in our case. Now, you might have a handy husband. I just don't. My husband is wonderful in many ways, but he's just not very handy, or he just doesn't want to do that kind of stuff. If you have somebody that can do that for you, you can maybe budget for something else. But if you don't, then you need to have a little bit of money put away because these little expenses are going to come up. I mean, just look at the cost of a washer and dryer right now, or go look at the cost of a refrigerator. All of this stuff is expensive. So make sure that you're comfortably cushioning in your budget for that new money that you're going to need to find in the case of emergency. Now, if you think your habits are going to change when you buy a house, you need to get real with yourself. A lot of people really can budget for some cushion in their monthly bills, but they just don't yet. So do that before you're forced to. So what I recommend to all of my buyers is please live with your budget for a couple of months, but also check your monthly bills and get rid of everything that you actually do not need. So an asset is something that appreciates in value. A liability is something that depreciates in value. If you have too many liabilities, you need to get rid of them. You might have just bought, a motorcycle. Maybe that's a third vehicle. Maybe you don't need a motorcycle. Maybe you can sell that. Maybe there's a storage unit that you pay for every month full of crap. And we all know that that stuff is almost always crap. Get rid of it. Have a garage sale. Do not pay rent for your junk, okay? A third thing that I see a lot of times on people's bank statements are things like DoorDash and like pet food delivery. These kinds of things are really luxury items, and if you can cut those out for the sake of being able to buy a home, then you should, because owning a home is going to get you so much further in life than having, any of those doodads. You just do not need them just yet. You can have them later once you are comfortably in your home, your income has risen, and you've made the adjustments that you need to. So the long and short of it is, just because we can qualify you for a house payment doesn't mean that you should spend that every month on your house payment. And I really encourage you to get real on the front end and just say, am I going to change my ways? I mean, are you going to be a new person when you buy a home? Probably not. So your habits have to change before you buy the house and not after, because the last thing I would ever want is for my clients to get into a house they can't afford and get foreclosed on, because that can be a tragic event for you that could take years for you to recover. So buy something cheaper now, live in it, enjoy it. You don't have to live in it forever. Your first house does not have to be your dream house. That's what I tell all my first-time home buyers. Get in, build some equity, and then turn that equity into your dream house later in life. If you have any questions, give me a call. I'd love to help you.